All right, good afternoon. Welcome back to Dan's Trades. Appreciate you coming out. As always, this is going to be for entertainment and or educational purposes only. I am not a financial advisor. This is not financial advice. Documenting my trade. So I recorded my trading this morning. Today is March 14th, 2024. Happy Pi Day. And I just want to say I'm going to talk over what I was doing here. So I'm just annotating some inversion fair value gaps I'm seeing. And I'm looking for a couple long trades here. I actually executed in both ES and NQ this morning. And we're going to take a look at what it was. I'm just going to let it play in real speed so you get a feel for what it's like to actually wait through the trade as I did this morning as well. I know a lot of times there's videos that are sped up and you have to slow down and look and see what's going on. So I'll just kind of talk about what I'm doing here. So I'm seeing a change. Looking for a sweep above that swing high right there and putting a fib on there, looking for potential exit targets. Just getting a feel for where the price might go. I have to pause for a second. All right, so we're back. Zoom in a little bit here. So I got NQ on the right, ES on the left. Looking at taking advantage of market maker buy models. And I will give a quick shout out to Zusi over at The Ones That Know, TOTK. Joined his group since ICT is retired from mentorships years ago. Studied his teachings, using all of his concepts in my trading now. So that's what all this is based off of, his ICT teachings. And a big shout out to The Ones That Know, and Zusi especially, for his mentorship. Really appreciate his knowledge and his sharing, so that's what I'm using. You can get a link in the channel descriptions if you want to join. Up to you or not. I fully endorse them. I use them all the time. One of the best groups I've found. And at the end of the day, it comes down to what resonates with you. So I've joined a few groups, and these guys are the best ones that resonate with me and my learning style. So you got to find what's right for you as a trader. The same thing isn't right for everyone. So looking back at a couple inversion fair value gaps, and looking to see here, there actually is a brand new traditional fair value gap right here, which would be a breakaway gap. Same thing on the ES side. These fair value gaps are breakaway gaps. They're allowed to stay open. I'm pulling over the inversion fair value gap from this side, whereas traditionally this would be this is a SIBI, so it'd be a bearish fair value gap. It all comes down to narrative and the major draws on liquidity, which is above us right now during this time frame when I was trading. So that's why these are inversion fair value gaps and not bearish fair value gaps. Every PD array just isn't exactly as it seems. It all comes down to narrative. So here I'm just looking for, anticipating a PD array to form as it breaks these swing highs is what I'm looking for. We see we have come above it, but we haven't closed above it yet. So I'm waiting for a close above. Patience is the number one rule in trading. Everybody says it. It's the hardest thing to learn. So we'll just keep an eye out here. These other things you see on here are new week opening gaps, new day opening gaps. You see month open, daily open, weekly open times from the kill zones indicators. But I'm not using those. It's kind of just an in confluence. So here's where we're looking for some speed above here to create a fair value gap. That's what I'm annotating right there, looking for a big jump up. So let's see if we get it. Looking for a PD array to form. Bouncing right off of this, looking like a nice level there. There we go, we get some nice displacement. Follow the displacement. Very good rule. And this is on a 1 minute chart. I did obviously start from a top-down approach, looking at daily, 4 hour, 5 minute, 1 minute. So once you get down to that, then you get down to the 1 minute chart. So this is you don't just watch the 1 minute chart all day long. If you do that, you'll get chopped up. So here we go. 1 minute fair value gaps have formed. Worst case scenario, I'll take a fill at the very bottom, but we have to wait this 1 more minute to see exactly if it's there. If it comes down for an immediate rebalance, if it completely engulfs it and closes back below, we wouldn't take a trade. So we're anticipating a fair value gap to form here and anticipating where the stop loss and take profit targets could be. So looking for 3 candles to form the fair value gap and where we might put the stops. Using the long tools there, we'll set up the same on the ES side. So NQ's kind of set up what it could look like. Nice little 12-point stop with an 80-point potential, 75-point potential. And not having to wait till it gets all the way, as we will see. All right, we're just about to the close of this minute chart, so it's looking like we're absolutely going to form a fair value gap. We just want to place our buy limits now at the top of the fair value gap, because it doesn't have to fill it in all the way. It might only come down a little bit. Looking for a institutional order flow entry drill. Could just be 1 or 2 ticks below it, so we want to get ready. So we got the sell limits right, or the buy limits right there. We'll set the tool up here, the long tool, to also map out the potential trade and where we want to put some stops. So it's a nice looking stop there, 6.5 points for a 14-point run, 15 handle run almost on ES. And over on the NQ, a little bit larger. So I'm looking at this new week gap. Want to drop that below consequent encroachment if we do get a fill right there. So that's where we're looking for trade management. 1 contract on each. Now the patience comes. Back in the old days, and you see many retail traders, all you see is nothing but up close candles. Try and chase it up. That's going to do nothing but make your risk management worse if you're trying to chase trades up. So one of my biggest hurdles to overcome over time was having the patience to wait for it to retrace and enter me in the trade. All right, got some take profits. Definitely some good opportunity here. 212 ticks on the NQ, 69, 70 ticks on the ES. We're definitely over 1-to-1 potentials. Let's see if we get a retracement. Because the last thing you want to do too is just try and chase it, then it retraces and it never goes back up. And here's another good point here too. So there's another inversion fair value gap that is formed right here that I didn't draw in because we did close above right here on this candle. NQ is not the exact same because this one hasn't closed above this fair value gap yet. But we see we are seeing it stopping. If it runs away, then it runs away and we don't have a trade. You have to be content with, missing it. Worst thing you can do is chase the trade, because then they do this. They turn around on you because, as you've heard many times, markets don't go just straight up or straight down. Healthy markets are going to have retracements, accumulation, manipulation, distribution. Yeah, we're just watching. Do we have good stop losses? We see there is a down close candle in both of these. That could be leveraged as order blocks, potentially. Didn't label that. Random that it broke above and then used this red line as specific support. That must be random. Same thing with this new week opening gap. Closed above and then found support right on it. That's random too. Interesting. And we are in the NQM contract. We had rollover week this week, so some people I saw a few people had issues trying to trade the H contract by accident. So it's one thing I do take less trades. So I haven't taken any trades since you've seen in the channel. So I've been doing a lot of studying, leveraging Zeusi's mentorship. Again, thank you, Zeusi. Thank you, ICT. Thank you, the ones that know. And here we go. Let's see if we're going to get tagged in or not. Price is coming right back down to our buy orders. I don't know if you could get any closer without getting filled on that one. That was like to the tick for a second. Just the bid and the ask spread was the difference in not filling it there. You see we're sitting at 52.17 and a half and 18.287 over here for the top of this fair value gap. I'll draw it in after I get in the trade. You'll see it. No SMTs right now. Smart money technique, smart money tool. We do have the same lower low, so that was the only thing that's missing from my A plus setups here. I guess there is kind of one right here on a 1 minute, but I don't put a lot of credence into 1 minute SMTs. But right here it is a good potential. SMTs are good for reversal confirmations, so it gives us more confidence that it's going to go higher. But down here these were the same, lower lows on both sides. Right here a tiny divergence with a higher high, and over here a lower low. So that can give us some additional confluence. And we gotta be getting close. And we're tagged in on both sides. So orders filled, live trades. Now we're all about trade management. We had patience to wait for our fill. Like to see some movement away to, here's the fair value gaps we're drawing in now, of exactly where we tag those off of. So we'll draw it on both sides here, the 3 candles that make up that fair value gap. And we do like to see immediately we have price moving away from that zone, so it looks like it could be an IO Fed. Spoiler alert, it's not, but it's exactly what they look like. So if you can get on those 1 or 2 ticks into a fair value gap, those are some of the best entries possible. But I do like the fact that it almost immediately did run up. 10 ticks or so on the NQ side, a few ticks on the ES side, so it's showing there is support there. That gives us additional confluence to get a feel for where order flow is right now. It's down here where we had these breaks of these swing highs. This is a change in state of delivery. So order flow is now bullish. 52 ticks, so big jump up there, or I should say a small, medium size in between. But I like that for confluence. Also could be taking out some stops. If anybody tried to get short here, anticipating a move lower, that could absolutely be a stop hunt for short ultra scalpers. But watch how it respects this fair value gap. The body right there, just inside it on the NQ side. As you hear many times, if you haven't yet, the wicks do the damage, the bodies tell the story. And if you're curious, this is the 10 o'clock time zone or time frame in New York. Always have your chart set to New York time, doesn't matter where in the world you are. That makes life a lot easier for you as an ICT trader. Unless you can do the math in your head from wherever you live, that's completely up to you, but I watch everything in New York time. All right, our next area that we want to watch for support is at consequent encroachment of the fair value gaps, which we see ES comes down to, touches, closes right on it. Watching that, we closed above it on the NQ side. What we don't want to see is we don't want to see a close below. That'd be one of our PD arrays that have been negated. If it got through this order block, that'd be a second PD array negated. And we also have a inversion fair value gap over here that would be negated. So that'd be 3 PD arrays. And if you don't know this saying yet, you'll hear it sooner or later what happens after 3 PD arrays are violated. Nice reaction from consequent encroachment. Continuing to watch order flow, liking it, both trades in the positive. So that gives us confidence. As long as we're not closing below, that's what we're seeing. And we are seeing some, it's going to take some time to work its way through these new week opening gaps, new day opening gaps. Once they close above is where we like. I would have preferred to see this as support, but we would never got tagged in if that was the case. So we got the one retracement we needed. Now we're looking for price to run away, but we do need to fill in a few areas before we do run, and it has to be the right time of day before it runs. So now we're just slightly negative, a couple ticks, basically break even right now. in between our macro times, so that's why we're not seeing price immediately run. So macro times are my favorite times to enter. But what's important is the fair value gaps did form within key times. So we're taking action based on that. All right, 10 more seconds on this candle. Continuing to watch where the bodies close, especially on the ES over here. So the ES is a little bit the laggard compared to the NQ. As we see, it did dig down. So here's our first one we're watching very closely here. If this closes below, we might be making a run at stops, so we might be wrong. So here we're 45 ticks, 50 ticks, give or take, as part of the trade management. So all part of time in the seat. You're not going to be able to do this the first time you trade. And there is a volume imbalance over here on the ES, so that is a bearish volume imbalance. So I'm hoping this is a short-lived, and we have already negated that volume imbalance. As long as it closes above that, that's the key, is waiting for the candle closures for confirmations. Looks like both sides had a 1-tick volume imbalance there. They're trying to trick people, so there we go, and it's negated. So bearish volume imbalance gone. Both trades in the positive slightly, or this one break even. Again, closing above the fair value gap, that's a good sign. Look at the damage the wick did there. The wick did a little mohawk. Tiny little mohawk on the bottom of the fair value gap. So that's why you need to have your stop below the 3 candles that form the fair value gap. If you have your stop right at the bottom of the fair value gap, you got taken out right there. So some new ICT traders will do that by mistake. That's a key point to understand. Low resistance liquidity run. That's what we're annotating here. We see these lower highs, lower highs, lower highs. Retail traders are going to think that that's safe resistance area, think they can go short, think they're going to be protected. Let's see if they're protected. We'll let the market tell us. All right, we got another close right around the top of the fair value gap. ES is above consequent encroachment still. So as long as price is closing above here, we still like the trade. Just waiting for when price is allowed to spool up. Waiting for some buying pressure. Hee hee. All right, let's take a little view of the market maker models in action. Price signatures, not just trading a pattern, but a pattern at the right time of day that also goes with the narrative, and the higher time frame draws on liquidity is key. All right, so NQ is definitely faster here. We're up 50 ticks. We're going to move our stop loss up, anticipating to potentially spike above this opening gap. Price should not come back down here until later. Might be random, but top of this wick and the bottom of that wick could be random. Lots of random things in the market, that's for sure. And now I'm looking over here. I just added a contract on the NQ side, anticipating potential immediate rebalance as this candle came down. Instead of forming a fair value gap here, price came down. I was looking, I filled it right as it was at the top of this candle. So I pyramided on into 2 contracts. Very key thing for my personal trading is now I don't add on to any positions lower than my initial order. So we see my initial buy was here. Second buy is up here, pyramiding in. So now we're 2 contracts, which also goes to managing the stop. I was able to move the stop up. Stop losses within my parameters. Did not add on ES because NQ is stronger than ES right now. It's a little more laggard on the ES side, so I didn't want to pyramid over here. But we'll see if price does come back a little bit. It's all part of the trade management, though. Giving us the ability to add a contract at the right price. Not using dollar cost averaging, which is more of a long-term investing strategy if you're trying to play the stock market. In my opinion, is not something that should be used in scalping or day trading, because that's how you will blow up your account and lose your ass. So my personal rule is I do not ever add on to losers. I only add to winners. And this is a winner when I added onto it because it was in profits. Looking at this swing low, keeping my stop below that, and adjusting the tool accordingly, just so I can get a judge for, points, ratios, 3.5 to 1 at that point. But price doesn't have to go all the way up here to win, as we'll see. So just slightly negative, 14, 20 ticks, 8 ticks. So a little bit of time wasted waiting here. Patience is a virtue. So now we see we have a few PD arrays. If price does go back down through here, I would be wrong, and I want to get out. The stop's there to protect my capital and do its job. So there I labeled that when the IRB is immediate rebalance. Then obviously price came back down, so help for trading, but look at how the bodies, again, respecting at or very near the top of that fair value gap. Random's the word of the day. Must be random. Over here, a little bit less. We did see a close below, but then immediate close above without seeing a close below the fair value gap. So not as fond of the ES trade, as we've seen. It hasn't been in profits like the NQ has, and NQ also allowed me to pyramid in. So NQ is definitely the stronger asset of the two today. Typically only trade one at a time, but every once in a while I'll trade both. Pretty rare though. I'd like to see some displacement pretty soon here, especially through above this high. I want to see it get above these highs. Start chewing up through the liquidity here on these short sellers that think they're safe. Do you feel safe if you got a short on right there? Double top must be safe, right? Oh, double top just got wrecked. Nice little spike above. Alright, ES is moving above. Want to see that above. There we go. Now we're getting some nice movement. Price is allowed to spool up. 134 ticks to the positive, 18 ticks. Managing the stop loss, reducing risk. We'll throw a quick fib on that tiny little retracement. 4 standard deviations, not a bad target spot there either. Just part of scalping. I'm taking a look at similar as I did over on this side where I dropped a fib on the down close candles. Same thing right before this small price run. As I dropped a fib on there and looking for 2 to 2.5 to 4. Interesting standard deviations to check out. And now we see, since we do have a nice area here, it's a good place to potentially take partials. So I'm going to set up a sell order right below that point of interest, or area of interest, I should say. And it just doesn't quite get there. And then I start to take a look over on the left side of the curve, and I see this fair value gap, which is catching my eye. So let's draw that in, pull that across. And we expect that to be support to potentially shoot it up through this next area of interest, but it may or may not be. One thing I did not annotate on this is another good reason that you'll see me taking partials here is this most recent nice move down that was from the 9:30 open. I didn't do it during this recording, but if you can kind of guesstimate where half of that is, it's good to target opposing PD arrays for exits. So we see I did get filled. We spiked up to take my one limit order out. So now I'm actively getting aggressive on my stops. I'm very happy being a scalper. I'm not a all-day trader. I'm not looking to get the highs of the day, hold for the low of the day to the high of the day. I'm not that type of trader. I'm not one shot, one kill. I'm not a swing trader right now. I am a scalper at heart, so I like aggressively managing my stops when they get nicely into profit. So we got to stop at 142 ticks above. We've already got one contract that came off here. And we got over 5 handles. 4 handles just wanted to stop there. We'll probably move that up a little bit. So there we go, 22 ticks, which is 1 tick above my minimum of 5 handles that you saw in the most previous videos. So as long as I can lock in 5 handles, I'm good to go on ES. And NQ took me out and ES took me out. So there's the profitable trades, both in one day. 2 seconds left on the video. Hopefully that is some value add for you. As always, I appreciate you coming out, and never forget, tomorrow is promised for no one. Live for today. Take care.